The next 2 weeks are very, very important in the market. There are large tech earnings with lots of macroeconomic news. So in today's video, we're going to take a look at the charts. We're going to take a look at the news and how all of that stuff is going to play out together. So if you guys enjoyed today's video and enjoy the content on the channel, regardless, please make sure to like, comment, subscribe, do all that good stuff. And let's get started with the video. All right. So first of all, Monday, Tuesday, Wednesday, Thursday, and Friday, we have lots of very important earnings. So we have Coca-Cola Monday, then the large tech stocks are basically reporting earnings this week. So we have Microsoft, Google, Facebook, Amazon. We had Tesla last week. So this week is going to be very, very important for the NASDAQ, right? So with large earnings, generally what ends up happening is into earnings, the price usually tries to stabilize itself or increase into the time when the earnings begin. So into Tuesday, so Monday might be bullish for that reason. Tuesday might also be bullish, more specifically closer to the close on Tuesday, prior to the earnings for Microsoft and Google. So that's going to be pretty interesting. So just keep that in mind for that. And aside from that, there's not much else to look at in terms of the earnings. Just overall, this week is going to be very, very important. So for the macro news, we have consumer confidence coming out Tuesday morning. Monday, there's no news. So that might also be a reason why the market can lift a bit, because there isn't anything to report on. And then Wednesday, basically we have news prior to the market open. But then Thursday, we have GDP numbers. So GDP numbers prior to market open on Thursday is going to be very important, as well as the PCE index Friday morning as well. So Thursday, Wednesday and Thursday, we have very, very, very important tech earnings. And Thursday also is another very important morning. So Thursday is going to be pretty interesting heading into this week. So we might have a bit of a rally, and then Thursday morning, many people aren't. Most likely, it's going to be a pretty much a gamble if you are trying to hold something overnight. Given if you were trying to go long or short Wednesday after hours, right? Not only are you going to have to deal with the earnings, right? You're also going to have to deal with the news coming out Thursday morning. So basically, you're trying to swing something for Wednesday. Facebook is going to have a huge impact on the market, especially if Facebook has like a very, very drastic move in earnings. So if Facebook is down substantially or up substantially, that is going to be another reason why the market gets affected into Thursday morning's open. So Wednesday, I just probably will not. So I mean, just swinging anything overnight. A lot of this week is just going to be gambling. So just keep that in mind. All right, so this analysis on the SPY is going to be a bit different than what I normally do. So I just want to look at basically the past year on the market. And in this bear market, we've had a very normal way of movement. So we would consolidate. We would either have a big move to the upside, and then it would take a certain period of time, but we would end up making newer lows from all of the highs that we ended up making, right? So I want to take a look at basically in the beginning of July, right? We consolidated a bit. We had a big pop, and then we ended up making newer lows, right? We consolidated a bit in September, right? Consolidation, had a big pop, and then we ended up making new lows below that as well. Similar to every basic pop that we had to levels of resistance. Over here, basically in the middle of November, we had a big pop to resistance, and then it took a bit of time, and then we ended up making newer lows, right? Same concept here in February, right? We consolidated, made a big move, and then we ended up falling again, right? So currently, right, we're at that point, in my opinion, in the SPY, right? So we were consolidating since April, and now we're in the point where we would continue to make a big move, but then we're also basically nearing the point where we would end up, in my opinion, we would end up making newer lows. So the reason why I say that is I kind of want to explain to you guys this with date and percentage points to the upside potentially as well. All right. So I've basically been looking at every single point of consolidation for these moves that we would have to the upside, and like specific days and how long it would take. Specific days where I feel like the consolidation of the move started to hint a move to the upside, right? And then I wanted to see how many days it took. Say, for example, you took at the money puts. So this whole point is, if you were to take at the money puts, how long would it take for the price to end up falling lower, right? So we could take this from, even, all right, beginning of August, right? We would end up skyrocketing for 4%, right? But, so say, for example, you went short here. Obviously, the price fell the next day. But then ultimately, right, the price ended up completely making a newer low 18 days after it happened. Okay, so this one lasted 18 days. Right. The other important one that I want to take a look at was November. So this was a clear defining moment for the market, right? Another 3.5%, 4%, right? It took a few days. We ended up falling lower almost immediately in the next few days. Then again, 15 days afterward. But then ultimately we made a completely new low, broke down below levels of support 23 days afterward. Okay, so once again, 3 to 4% seems to be the pattern here, right? And then again, say for example, this happened back in January into February, right? So again, 3% up, but then ultimately it took 18 days, basically 17 to 21 days to make a new low from this point. And we ended up making, continuing to fall lower. So 3 to 4% to the upside with somewhere between, 3 weeks at a point of consolidation. So we can still continue. So with this logic, right? Essentially, if we were consolidating over here and we made a big move to the upside, right? Even if it's 4%, whatever. 4% is at 425, right? Let's just put it at 4.5%, right? Within 28 days, right? If it would take 28 days to make newer lows from this point on April 10th, that would essentially mean that within the month of May, sometime within the middle of May or the end of May, essentially, like there's multiple different candles you could take for this move, but it's all should be within like the same time frame. But essentially what I'm saying is, given this same logic, right, by the middle of May or the third week of May, we should see 408 completely broken. And at that point, we should continue to fall lower, right? But the worst case scenario would then be so essentially, I hope like this makes sense, right? So we're looking at a period of consolidation to another impulsive move to the upside. So right now, if we do have another impulsive move to the upside, we could see 420 to 430, right? Then this could end up lasting into the end of May. So all of the people that would try to position themselves short for these past 3 times using the same date and time, their puts would be burnt. And at that point, all the MMs would need to do is keep the market up with artificial buying power, essentially, and understand that people are trying to go short following the same pattern. So the absolute worst case would be if the market holds up into the end of May and then it starts falling into June, July. So the point of me showing all of this is essentially, at the moment, right, we could be in a period of consolidation to the upside, but in general, right, it doesn't really feel that right to be overly long, right? Especially when you look at the history of what goes on during during March, April, and May. All right, because tech earnings happen during this time, and essentially, I want to also take a look at the past Aprils in 2021, and basically explain how this is similar. So this is a chart of April 2021, and the reason why I'm sharing this is because once we broke the low, right? Obviously, April and afterward, we never retested and made newer lows. We continued to make newer highs, and it made more sense to buy the dips here instead of continue to short and follow the momentum down. So essentially, right, what we see here is into the end of May, into the end of April, the market is strong, right? Again, you know, similar into the middle of May, marked a top, and then that's when we just ended up falling much lower. And if we were to do the date and time essentially on this, we didn't see huge upside, but then, you know, similar 3 weeks out, we ended up making newer lows completely from this point. So I only share this because I want to take a look at what the large tech stocks were doing at the time of this and what the similarities are. So this is SPY, right? So Tesla, right, during this time was yeah, so basically Tesla was showing a lot of weakness, right? So all right, so basically I want to show you the similarities of what was going on with the large tech stocks in conjunction to what was happening in the SPY at the time. All right, so side by side, the right side is the SP 500, the left is Tesla. Okay, so Tesla during this period of April to May, right? Tesla was already showing a lot of weakness and failing to break above levels of resistance. You could see here clearly, like, we were breaking below levels of support. We were showing weakness. We couldn't sustain the strength. We continued to show weakness and weakness and weakness. All throughout this time, the market was still making new highs all the way up until May 7th. The market broke and closed above its range. But what was happening with Tesla here, right here, Tesla was already showing weakness days in advance. Basically like 2 weeks in advance. And this was a very, very bearish candle on Tesla, actually, because this we wicked to the upside. So it would have made a lot of sense to go short with a stop loss at this high, or like, you know, specifically above this high. You should have been short basically on this move. So Tesla basically showed a lot of weakness prior, in advance to what was happening with the SPY. All right, that was my point of explaining that. So we could take a look at Apple. All right, Apple, another very large, obviously $1 trillion company. During this period of time, Apple was consolidating, right? The SPY was also consolidating, but we had this big reversal, bearish candle at the end of April, and from there, by May 4th, we just continued. We broke the range down and we never reclaimed it. So then basically Apple was trading within a lower leg here, while the SPY was making new highs, right? So the SPY made a new high on May 7th. May 7th, once again, marked a very bearish candle. It wasn't really that bearish, but still, we're trading below the lower leg, while the SPY made a new leg to the upside. Apple was trying to break into the, you know, into a level of resistance, but the SPY had already closed above. So Apple, Tesla were both showing weakness, right? Next, we could take a look at Microsoft. Same concept, basically. Microsoft on the daily was showing weakness. We were failing to break above levels of resistance, and then Microsoft also started to show weakness, clear-cut weakness, breaking below levels of support here and never reclaiming them, while the SPY was making new highs. All right. So the only thing similar in terms of the large tech stocks and what was happening back in April of 2021, May of 2021 is that Tesla is showing a lot of weakness currently. Apple, Nvidia, the other large winners aren't showing this extreme amount of weakness, obviously. But when you take a, you know, sorry. Take a look at Apple. We're not showing an extreme amount of weakness similar to what was happening before, but we're still consolidating and failing to break above levels of resistance. Microsoft, similar. Google, similar. Amazon was showing, basically Amazon was also another stock that I wanted to show you guys for April of 2021, but Amazon is getting a lot of love because one of the sectors that do really, basically a lot of the sectors that do well during this period of time are not tech. It's more of consumers, industrials, things like that, economically sensitive stocks. So Amazon is doing really, really well. So this is an anomaly. It's not really, it didn't really happen back in other cycles, but this is something that's interesting. But the other large tech stocks are not showing strength. And Amazon is not going to continue just being able to lift itself. Also, so just keep that in mind. Long story short, regardless of all of the time cycles and everything like that, currently we broke below the rising wedge on the SPY, right? So this was the first trend line. There's another trend line that you could also take a look at, which connects the low here, right? So if you extend this to the right, this shows that we technically have not broken outside of the lower level of the rising wedge. So this is another way to look at the market right now. And currently we're still, so if we were to remove this, right, this is still a rising wedge on the SPY, and we could still bounce off of this 408, 409 area. And from here, right, from here we can end up rising back up, potentially making a new high. And from here, if we end up falling, that would be at the end of April, or potentially, you know, if we were to extend this out, it would be towards the beginning week or two of May, right? So basically from the beginning week or two of May, if we were to continue making a newer high heading into 420s, that would coincide with the upper level of this rising wedge. This would coincide with a potential bounce into that area as well. This would also basically coincide with the entire day cycle thing that I was also showing. So in general, right, as long as, so it, you know, the main level that we need to basically see hold is 408. 408, 407 area is going to be very, very important on the SPY. And below that, then you could comfortably, like safely be bearish in my opinion. So, and that would be a good level to basically flip bullish, bearish at that point. So with all of that said, the middle of May should be some sort of top in the market. The middle of May, end of May, worst case in my opinion, would be a top. If that's not the case, then you know, regardless, that's basically a point in time where I'm going to like start leaning very short. So the middle of May, if we do end up bouncing to 420, 425 into the middle of May, end of May, I'm going to start buying into puts for 3 months out, and I'm going to average in basically. So I'm going to buy first at around 420, 425. I'm going to average in around 430 to 435, and then 440 I'm going to get much heavier, and then I'm going to basically expect that the market, for all of these are for a few months out, but I'm expecting this range here to be the absolute like top before we end up getting a big drop to the downside. And I would be surprised if that doesn't happen. But for now, if we were to show this with a new rising wedge, right, the original one was broken below 412, 413, but now the main level that needs to essentially hold is 407 to 408. Below that, easily bearish. So I hope this made sense. I hope you guys can kind of see what I'm looking at here. And I could just extend this to the right. So basically into the middle of May, we can hit all of these levels all the way into 420. So, and that would still be trading within the rising wedge. So yeah, I hope I helped. I hope you guys enjoyed today's video. Please let me know if I could do something better. And yeah, take care. Have an amazing Sunday. Have a good one.